Heightsfield at 11 shares. Just going to do a series of videos on the indicators that I use because I realise I talk quite heavily about how I'm trading and what I'm doing and why I'm investing in something or why I'm picking this certain trade. And I use plenty of indicators on my TradingView charts, and people that are fairly new to this may not understand what they mean. So I'm going to do a series of videos on the basics. This video I'm going to start with moving averages and how they're important to me, how they're important in trading, how they're important in investing, and just what you're looking for and what you can see. So if I click through to one of my TradingView charts, if I go through to ShareFinder UK, and I'll get one that's quite pronounced so that you can tell the difference, and I click through to Harbour Energy, say, you will be confronted with quite a quick view of a chart. This won't have any moving averages on it. So if you're interested, you will probably need a piece of software to view charts, and TradingView is the one we use. So you can click on TradingView here and it will come through to the chart. Now this video is going to be about these moving averages, so all these chord lines on here, what they are, what they mean, what differences you can get. I have on this chart a yellow line, a blue line and a black line that are all simple moving averages. Simple moving averages, very easy to explain, based over a number of periods, and you can change that period to whatever you want, whether it be 20 or 40. It's taking the price, so if it's over 200, we're taking 200 prices, we're adding all 200 prices together, and then we're dividing it by 200 to give you the score. So at this point here, where the chart's yellow line is there, it's taking the 200 previous prices and giving you an average price, which ends up this level here. And if you take that price from here, it's these 200 score, these 200 prices divided by 200, and you'll get the average. So you add all these 200 up, divide by 200, and you'll get the average. That gives you this simple moving average score. Now the purple line and the red line, and in some ways the dotted line, these are EMAs. So these are exponential moving averages, and the difference between EMAs and SMAs is that an exponential moving average is weighted towards most recent pricing. So there is a weight factor to the most recent prices which gives them more importance within the calculation. So this tends to be a more responsive average that reacts quickly to recent price changes. In terms of my trading, I like a mix of both. This tells me how quickly and what's going on in the short term. This is used for a different type of trade, but the 50, the 100 and the 200 are my key simple moving averages to determine the trend of this share price. So as we know, these are stacked up 200, 100 and the black line is 50, simple moving averages. They're stacked on top of each other, meaning this is in a downtrend, and as you can see here, it has been in a downtrend from the price. So what do these technically show us? They show us which way a price is moving. They can show us when a price is changing direction. So if these start to turn in the opposite direction and the 50 goes over the 100 and then the 50 goes over the 200 and then the 100 over the 200, these can be indicators for telling you that the price has now turned bullish and the trend is now potentially turning the opposite way, and that gives you the confirmation of that and shows you that. So that's a quick introduction to moving averages. If you've got any questions, please get in touch. And if I've missed anything, please highlight it and I will add it to the next video. Thank you.